Listen carefully. Right now, while most retail investors are distracted chasing hype stocks at the top, smart money is quietly positioning in penny stocks that actually have fundamentals, real revenue, and upcoming catalysts. I'm not talking about lottery tickets. I am talking about real companies trading at penny stock valuations that, if even one or two things go right, could realistically deliver 5x, even 10x returns by 2026. And here's the truth most people don't want to hear. The biggest gains in the stock market are not made when a stock is already popular. They're made before Wall Street wakes up. Today's video is different. These are 6 fundamentally strong penny stocks with real businesses, real revenue or clear paths to it, massive industries behind them, and upcoming catalysts that could completely reprice these stocks. If you care about high-risk, high-reward investing, and you're serious about building a speculative portfolio for 2026, this is a must-watch video from start to finish. Before we jump in, real quick, if you get value from deep dive penny stock content like this, hit the like button. Let's aim for 500 likes on this video. Make sure you subscribe if you're serious about small cap and penny stock opportunities, and turn on bell notifications because I post time-sensitive ideas you do not want to miss. All right, now let's get into it. Quick disclaimer as always, I am not a financial advisor. This video is not financial advice. Everything discussed here is for educational and entertainment purposes only. Penny stocks are high risk, volatile, and speculative. You must do your own due diligence before investing a single dollar. Never invest money you cannot afford to lose. Now, let's talk stocks. Stock number 1, Big Bear AI. Let's start with a name that serious US investors already recognize, but that is still trading at a penny stock style valuation relative to its potential. BigBear.ai. Big Bear. AI operates at the intersection of artificial intelligence, data analytics, and US government contracts. This is not a concept company. BigBear.ai provides AI-driven decision intelligence to STIAOs, U.S. defense agencies, national security organizations, supply chain and logistics operators. They help governments and enterprises analyze massive data sets, forecast outcomes, and make real-time decisions. Now, here's where this gets interesting. BigBear.ai has deep roots in the U.S. defense ecosystem. This company has worked directly with the Department of Defense, Homeland Security, and other federal agencies. That alone separates it from 90% of AI penny stocks. You're not betting on a startup hoping to land its first customer. You're looking at a company that already operates inside the government system. From a valuation standpoint, Big Bear. AI has traded at levels that imply very low expectations, despite being positioned in one of the fastest growing AI segments, government and enterprise AI. Revenue hasn't exploded yet. And that's exactly why the opportunity exists. Wall Street typically ignores companies during transition phases, margin improvement phases, contract expansion cycles. But once revenue stabilizes and visibility improves, re-rating can happen fast. Now let's talk catalysts. Big Bear. AI continues to pursue new federal contracts, and any major contract announcement can instantly change sentiment. Earnings updates are crucial here. The market wants to see improving margins, contract backlog growth, reduced cash burn. If those boxes get checked, this stock does not stay in pennyland. This is a narrative stock with fundamentals behind it. And those are the ones that go parabolic when momentum hits. Stock number 2, Red Cat Holdings. Next up is a stock that gets massive attention whenever defense spending hits the news. Red Cat Holdings. Red Cat operates in the military and commercial drone space, which is one of the fastest growing defense markets in the world. Let me be very clear here. Drones are no longer optional in modern warfare. They are essential. Red Cat specializes in small, unmanned aerial systems, tactical drones used for reconnaissance, surveillance, military operations. The company has actively worked with U.S. military agencies, and this is not theoretical. Every time geopolitical tensions rise, drone stocks get attention. But when actual contracts are awarded, only companies with approved technology benefit. That's what separates Red Cat. From a fundamentals perspective, this company has gone through a restructuring and focus phase, aiming to align itself directly with military demand. Revenue growth has been uneven, and that's exactly why the stock remains cheap. Wall Street hates uncertainty. Retail investors who understand cycles profit from it. Catalysts here include defense contract announcements, increased military drone budgets, earnings showing operational improvement. This is not a safe stock, but it is a real defense technology company trading at speculative levels. If a Red Cat secures meaningful long-term contracts, this stock can reprice violently upward. Stock number 3, Bitfarms. Now let's talk crypto. Because ignoring crypto in a 2026 discussion is a mistake. Bitfarms is a Bitcoin mining company with operations focused on low-cost energy, primarily hydroelectric power. That matters more than people realize. Bitcoin mining is not about hype. It's about energy efficiency, hash rate growth, operational scale. Bitfarms has invested heavily in infrastructure, positioning itself to survive bear markets and thrive in bull cycles. Historically, Bitcoin miners move in cycles. They get crushed during downturns and absolutely explode during bull markets. If Bitcoin enters another strong cycle into 2025 and 2026, miners like Bitfarms become leverage plays on Bitcoin. But here's the key difference. Bitfarms has worked to maintain lower production costs than many competitors. That means better survivability, higher upside when BTC prices rise. The market often prices miners as if Bitcoin will never recover. That pessimism creates opportunity. Catalysts here include Bitcoin price appreciation, network difficulty adjustments, improved margins during earnings. This stock doesn't need perfection. It just needs Bitcoin to do what Bitcoin has always done, move in cycles. And when it does, miners move first and fastest. Stock, number 4, Plug Power. Now let's shift gears to clean energy. Plug Power is not a new company, it's not a startup, and it's not unknown. But here's the thing. Fallen giants often create the best risk-reward setups. Plug Power operates in the hydrogen fuel cell space, which governments around the world have identified as a key component of future clean energy infrastructure. The company has faced execution issues, margin pressure, investor disappointment, and because of that, the stock has been absolutely crushed. But fundamentals don't disappear overnight. Plug Power still has major partnerships, government support exposure, long-term contracts. The market is currently pricing Plug Power as if hydrogen has no future. That's an extreme assumption. If Plug Power stabilizes operations, improves margins, and benefits from future clean energy incentives, this stock has massive re-rating potential. This is not a short-term trade. This is a turnaround speculation, the type that delivers outsized gains when sentiment flips. Catalysts include earnings showing operational stabilization, government funding or incentives, strategic partnerships. High risk, but enormous upside if the narrative shifts. Stock number 5, Cybersecurity. Now let's talk about cybersecurity, because this is a space that never stops growing. Cybersecurity operates in cybersecurity and IT services, focusing on protecting organizations from increasingly sophisticated cyber threats. Cybersecurity spending is not optional anymore. Governments, hospitals, corporations, everyone is under attack. Cybersecurity positions itself as a service-based cybersecurity provider, offering managed security services, threat detection, IT risk management. This is not flashy consumer AI. This is boring, necessary infrastructure, and that's exactly what makes it interesting. The company has been working to expand its contract base and stabilize revenues. From a valuation standpoint, it trades at levels that imply very little future success, despite operating in a sector with massive demand. Catalysts here revolve around contract announcements, revenue growth, consistency, improved financial transparency. This is the type of stock that doesn't move until suddenly it does, and when cybersecurity names catch attention, money rotates fast. Stock number 6, Ocean Power Technologies. Last stock, and this one is for investors who understand asymmetric bets. Ocean Power Technologies focuses on wave energy and ocean-based power systems. Yes, it's speculative, but it operates in a space with almost no competition and growing interest from defense, offshore monitoring, renewable infrastructure. The company develops systems that can generate power in remote ocean environments, useful for surveillance, communication, data collection. This is not about replacing solar or wind tomorrow. This is about niche applications where traditional power sources don't work. The stock trades at deep speculative levels, but any meaningful contract or deployment announcement can completely change its valuation. Catalysts include government or defense contracts, technology validation, revenue expansion. This is not a core holding. This is a lottery-style fundamental bet. Small position, massive upside potential. Final thoughts. How to think about these stocks. Let me be very clear before we wrap up. Not all 6 of these stocks will succeed. Some may fail, some may stagnate. That's reality in penny stocks. But you don't need all 6 to work. If 1 or 2 deliver, they can pay for the rest, and then some. This is about position sizing, patience, understanding risk. The biggest mistake retail investors make is going all in on one idea. The smart approach is calculated exposure. Now I want to hear from you. Which one of these stocks is your favorite? Which one do you think has the best chance to 10x by 2026? Drop your rankings in the comments. I read them all. If you found value here, like the video, subscribe to the channel, and follow me on Twitter X for real-time market thoughts and updates. And remember, this is not financial advice. Stay patient, stay disciplined, and I'll see you in the next one.